All right, folks, welcome. Welcome to a special Wednesday edition webinar here. We have a lot to cover today. Today is going to be an exciting one. I'm busting at the seams, as you can tell. So, Steve, how you doing? Bernard, how are you doing today?
Doing well, thank you.
All right, so this market has been absolutely crazy. There's a lot of different things that are causing it to be like that. So one of the things that we're going to discuss today is risk mitigation and risk management. We're also going to discuss the coronavirus, probably going to discuss the Fed, probably also going to discuss some politics. So without further ado, Stephen, take it away.
Man, how are you, Bernard?
I'm hanging in there.
Okay, all right. I know the markets have been a little willy-nilly lately, huh?
It's been tough.
Yeah, but you know what's interesting for me is that you and I have been through this in and out over and over throughout the years, and I think I wanted to take this time in this webinar to do a few things. One is to say, okay, the world isn't falling apart just yet, right? And number two is how to mitigate that risk and how to slow it down. And I want to start first. I'm now looking up at the 10-year right now, Sandman. I'm seeing it at 0.959, getting worse. But for me, mitigating risk, a few weeks back, I was pounding the table when I thought the market was just too crazy and too frothy. My risk mitigation was, I'm done. I'm out of this market. You guys play. You guys have a good time. And the market kept going up. That's how I mitigated my risk. I did still play day by day. I still trade every single day. I have for 29 years. But I didn't have my actual real money on the table. And so I pulled that money off. When the market fell, what do you think I did, Sandman?
You probably bought.
Yeah, I did. I bought back in. All right, so talk to us about how you mitigate risk.
Yeah, well, it's not any secret by now for anybody in the room. And when I say this, it's not for everybody. I don't mean to say it's the one way or the only way. There are a lot of different ways to approach the market and make money. I am comfortable doing it the way I do it. I'm a true day trader. I don't hold overnight. I'm pretty aggressive in a normal market. So when we have these types of conditions, instead of I'm normally doing 6, 9, 12,000 lot. I'm doing 1,500. I'm doing 3,000. I'm not sticking my neck out there. So that's another way. And
are you telling me that you don't hold anything? Not your IRAs, nothing?
Oh, no. I'm just talking about my trading account. I do have account.
Okay.
I have a separate account that I have things in at JP Morgan, but I don't touch it. I don't look at it.
Yeah, I'm the same way here. I have a separate accounts that I don't even know what's in half of them, right? I just leave them alone.
I very rarely make adjustments to it. But again, that's but the point I would make is that however you trade, doesn't have to be like me, doesn't have to be like Steve. However you trade, you should find ways to de-risk your approach, especially if not normally. I mean, I do that normally, actually. I try and find ways to do that, not by lessening my size, but other ways. But in this type of environment, definitely you have to make some adjustments, I think, at least for most. I mean, there are people that love volatility and love to trade it. I know. I mean, I like it if I can have an edge. I don't like it without an edge.
Well, let's take a trip back memory lane here. Let's go back all the way back to the .com bubble. You and I was new in that fairly at the time. I'd been trading for a while, but not like now. I was in pets.com, I killed the .com bubble, and I learned financial numbers were important back then. And they got out of control, and I felt the same way. And I think a lot of people don't realize that when I'm pounding the table and saying the market's too frothy, it's because I'm still feeling some of that pain from the .com bubble.
If you go through something like that, you don't ever forget it. I made the point yesterday in the room, and I don't know how many picked up on it or saw the comment, but that was because people were saying, well, how bad could the market get? How bad can a market get? The .com bubble, when it collapsed, took the NASDAQ down 85%. That's nearly total elimination. So if you had
I think Ryan earlier made a mention, if the NASDAQ fell 85% today, what would it be, Ryan?
Exactly. So if the NASDAQ fell 85% from where it is right now, we'd be printing 1325.
So when you say, well, gee, my God, why, why would you bring it up or why would you talk about it? I bring it up because it happened. I've seen it before. So when you see something before, you can't say to yourself, well, that can't happen, because it did happen. Right. So that's why rule number one is anything can happen. Fed can cut the discount rate before outside of a regular meeting. Companies, lots of things can happen that we don't expect. So I don't like to be surprised by things in the market. Sometimes I am, but I try to avoid being surprised. I like to think of all my risks when I'm trading, I think it serves me well. I
think with the surprises are good, the black swan events. But 87 was a good year in October to learn that we needed to put collars and things of that nature on our. Go ahead. I know you're going to change it. There it is.
Yeah, no, I am because I have a really strong view on that. I don't think, except for I guess we halted trading the night of the 2016 election.
Yeah, I was there.
We haven't done it. Have we done it have we halted during the day? Have we ever done it? No. See, to me, if we ever have to do that, it's like the Fed cutting yesterday. A lot of people think that panicked the markets, and that may be valid. But I think if we ever have to halt a market,
it happened in 1929.
Yes. Okay. So, but if they stop markets because we can't trade, then unless the plunge protection team is going to be in there, I don't want to be a part of that. I don't. It would make me more nervous than.
Now let's be honest. We've had a few times when the NYSE went down. Or technical glitches.
Different thing though. Different thing.
Well, Steve, let me ask you, Steve. In 1929, what happened when that took place?
Well, obviously, a lot of people at that time, the markets were booming. We had an influx of immigrants coming in very heavily. Manufacturing was exploding. The country of the United States was getting an influx of immigrants because of other issues outside of it, the government's right, and they were coming in, and all of a sudden we had a big boom, right? The 20s were the roaring 20s, and what happened was on the floor, some of the people knew what was going on, that there was some selling around the country, because back then you had to pick up a rotary thing, and you had to call your broker, and your broker called another broker, and the broker called another broker.
Now, were you on the floor at that time?
Okay, yeah.
I'm sorry, I had to do it.
It's okay. But what happened was,
didn't ask me.
Yeah, I noticed that, right? But what happened was there was a breakdown in communication, but when it finally hit, everybody was selling, right? And there was no more taxi drivers giving out stock tips and that nature. And we realized that at that point, then it all fell apart, right? Has anything changed since then? Every time we've had a crash like that, it's been the same thing. Breakdown in communication. We're seeing it now, right? We don't know the communication of what's coming out of China, and that's what's happening. A lot of the fear is starting to come in, and I've always said this, the number one education that anyone should ever have in the markets is psychology. If I know what Sandman's thinking, and I know what Ryan's thinking, then I'm going to do the same thing as they are, and I'm going to make money off of that.
I think the fear isn't just about China anymore. I think I have more fear about what we're not doing here. I mean, we're still not testing here. I think if we were testing and we knew the extent of the problem, even if it were bad, I'd rather know. I would feel better knowing how bad it was rather than imagining how bad it could get. And we're not there yet. We're still.
So are you saying we're not seeing the blood in the streets yet?
Look, I mean, I don't. I think I've said this is the most orderly panic I've ever seen.
Yeah,
and we're down a lot. But I don't see people freaking out. I see people still wanting to buy. To me,
wait. You said people buying. I don't think it's people buying. I don't think it's you and me that's going crazy, even though I did buy on Friday. I think it's the stock buybacks. I think that these companies are taking advantage of this fear, and they're buying into this fear.
But I know people who I know people in my circle. I know people who in the past, when they have gotten frightened, they would just dump. They haven't done that. I don't see out and out, let me get out of the market panic. I don't see I would want to see it so bad that you would want to be in there and I wouldn't want to be in there, that nobody would want to be in there. That's how bad. we had that in 2008, 2009.
So this is a really good segue right there. So you're talking about you're not seeing people dump everything. So one of the things that we're here to talk about is volatility and portfolio protection. So instead of just dumping everything, what else would you guys do in order to protect yourselves so that you don't fall victim to emotional selling or panic selling?
You can buy. The problem is once it's started, it becomes very expensive. But you can obviously buy protection on your account by buying, by buying market puts. But it's an expensive proposition. In this case, it would have been worth it. I mean, I saw one money manager who had done it for a year and made more money in this instance than it had cost her. It was a female, had cost her in a year, and it turned out to be good for her. It saved her clients. And net, they were ahead of the game after this last drop, after doing this protection for a year, even paying for it and having the market go up and losing that insurance money. It's insurance. It's insurance.
But I think you said probably best that you said you had a lot of people, friends that didn't get at it on this time around.
Yeah.
Because I think that the profit has been so good. For me, when a profit is this good, I would put trailing stops in. Right.
It's a good point. It's easier not to scare if you're still green.
Right.
It's when you start to lose. It's when you start to, yeah, exactly. You're right. It shouldn't be that way because that's your money. I mean, in other words, you should reset that because that money's mine now. You shouldn't, you should have a limit to get out, but a lot of people don't.
Well, I for one like to play with the house money. When I get my money, take my half out, and it's the house money, right? And then the house money, I'll put my trailing stops in, and I really don't care. Yeah. That's why I don't do day-to-day like that. I mean, most of my swing trades, I'm looking for things like insider buying, institutional things. I'm looking for things that are maybe a little farther out in the future, whereas you're kind of playing off of the day-to-day news. Is that right?
Yeah. I mean, you're talking to somebody who I bought. Charlie mentioned the VTIQ, and it had a nice big block at 13. So that's kind of like red meat for me because the stock has momentum. I bought 13 and I sold it for 30 cents. Would it hit 14?
Yeah, I think it's all the Robinhood.
I took 30 cents on it. But for me in this market, I'm happy taking 30 cents. I actually I have to change that. I'm happy in any market taking that. By the way, I saw somebody mention somebody in this as we're speaking. Somebody say that the plunge protection team and referenced it to the good old Reagan days. It's still there. It still exists. The Treasury Department controls it. It may be even more active than you know, but it still exists. It's not a relic of the past. It's not a relic of the past. I promise you.
It is definitely not a relic of the past. I talk to the Treasury Department every day, like yesterday. I will. Okay, so let's get into this. Sandman, you and I are friends. Most people don't realize that outside of the history. Look, I think the chat room is going to get heated, right? It's an election season, and I want people out there to know that I'm okay as a moderator that it get heated into the chat room. All I'm asking is that we have a discourse like Sandman and I are having now, that it's we're okay to go back and forth, we're okay to have different opinions, but I don't like name calling. Racism.
I would say something a bit different. I want to apologize to anybody who may be offended by any of my views because I have really strong ones.
Well, so thank you.
I do have a lot of people in my life that are near and dear that I love that are to the left of AOC. I mean, they're very, very, very liberal. So I have to learn how to, you don't lose friends. I think some people do lose friends and family over this. I'm not willing to.
That's terrible.
But I really try to be respectful of other people's views and opinions. I'm informed by them. And it really, actually, if I didn't care, but when I see somebody who's offended by something I say, it bothers me because it makes me feel badly. It really does. I don't want to, people are here to try and make money and enjoy that room and use that room to their betterment. And I don't want anybody to be offended or feel like they can't be there because of something I'm writing in there. So that is the last thing I want to do. I'm as guilty as anybody. So I will make every effort to make sure that doesn't.
I think you guys both bring up really, really good points. Stephen, I think you hit it right on the head, right at the beginning there. I'm all for discourse too. I have my set of friends are all over the political map. I've got some people that are right, some people that are way right, some people that are left, some people that are way left. That's how it works. And Bernard, much like you, I'm not willing to lose my friends over politics. However, Steve, you did say something that's very, very important. In discourse, sometimes it can kind of go off the rails when you start name calling, when you become aggressive. And I think that that's one of the things that we would like to kind of take away from the room. Having a heated debate isn't a bad thing. Having two contrasting viewpoints discussing each of those views with one another is not a bad thing. When it degrades into name calling and insults and stuff like that, that's where you kind of lose all of that.
And I encourage that, right? I encourage discourse, because if anybody out there thinks that politics does not affect the markets, they have another thing coming.
Absolutely.
Look, anything the president tweets out there or says, especially if it's an elected official in an elected position, it's going to change the world, right? So,
but we live, you know, I agree with you guys, but we live in a time where people feel really, 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 really strongly. And
right.
Does it bother me that I feel like people can't say what they feel anymore? Yeah, I feel that's been shut down. I could go further and inflame this by saying why that is. I'm not going to, but I don't.
Why not? We're here live. Let's do it.
No. But I don't want to see anybody's. I don't want to see anybody's opinion shut down. I don't care whether they agree with me or don't agree with me. On the other hand, I'm trying to be respectful of people I know in that room that will say, I want to stick to the market, period. So, I mean, I don't know how we balance that out. Hopefully, we'll try to be respectful of each other. Because I've talked to a lot of these people individually, some of them that I don't agree with politically, and they're all really good people, and I like them. And they're.
You know, Bernard, I've lived in Washington, D.C. almost 16, 18 years, like 17 years, I guess. And you know what? I have friends on both sides of the aisle, and we go out drinking and do all the same things, you know, like I'm in New York, same thing.
But you realize a lot of the country is not doing that. A lot of the country has kind of peeled off into two arms camps.
That's why we've got to be. That's why we got to show them how to do it, right?
And you guys make the rules, so I'm happy to go with whatever.
And I want to throw in another wrench into this entire equation. This is part of this is one of the reasons that we're seeing a lot of volatility. Wouldn't you agree? I mean, I think today one of the reasons that today the futures were so green in the morning is because of the Super Tuesday stuff last night. Like, politics is not only is it going to play a role, it can play a large role into it. And the more that people are divisive, or the more that there's extreme on one hand and extreme on the other, that's going to bleed into the volatility in the market. And I think that it's important. One of the reasons I like discussing this with risk mitigation is because there are ways to handle this. There are ways to keep control of your portfolio and obviously control of yourself while still working with people that may have a different opinion than you.
Yeah, you're right, Ryan. As you and I talked about last night, I believe in Joe-mentum. I said it's going to happen. And I think all three of us can agree, God bless America. I hate socialism. I don't ever want to see it in this country. And I think that was very bullish for this country, and especially the stock market, because I know that, you know, with Bernie Sanders saying he wanted to tax some of the stock trades, man, I'm totally against that. And I think Bernie had so many ideas about how he wanted to go after those of us who are in this world. And I first want to say I'm glad to see him being gone. And when it happened, everybody started buying again. So, yeah, Joe-mentum is real.
Joe wants to do a transaction tax, too. Less than Bernie. He wants to do 1/10%. Bernie was proposing 0.5%, which would have meant 1% round trip. I hope Joe eliminates that. Would make me happy.
Well, let's see who Joe picks as vice president. I think I've said this many times that this election for the first time might be where the vice presidential pick is actually the biggest pick.
I'd be real surprised if it's not that senator from Minnesota, Ms. Klobuchar.
Yeah,
makes sense because that's the part of the country where the battle's going to be fought.
Right? Well, I think the issue right now that there are a lot of students that are disillusioned, right? That's why they were voting for Bernie. I think if anybody on the Democrat side were to say, "Hey, we'll eliminate student loans," all of a sudden, I think you'll see some push to that side. And I do think Trump he has his guys' work cut out for him. You know, I think anybody who says that Trump's going to go into a walk is crazy. There are some things going on him. He's an incumbent. That's good. The economy is has been up. The stock market's still up, right? But there's some issues that I feel like, and, as we know, this is an electoral election, so you got to win it by states. And some of the states that he pulled it out barely isn't as happy as they were, unhappy as they were a few years back, including Pennsylvania, blue collar, right? Including states that are in the farm world, like Missouri, Wisconsin, obviously, Michigan. These states aren't as happy. Manufacturing is down. PMI is down. Now it's flat today. We already talked about that. But this country isn't built on manufacturing anymore. It's built on services.
I want to see going forward that Joe Biden is a presumptive nominee now. I think most people, betting odds certainly say that. But I want to see him do a 2-hour debate one-on-one with Bernie Sanders where he can't stand there and be quiet most of the time. We'll see how that goes. I think that's going to be an issue. But we'll see. Maybe not.
If he can remember where he's at.
If you can remember where he's at.
Well, and so this is another good point. To tie this back to volatility, we got a long way till November. So I think that it's quite possible that we are going to experience volatility from now until November, and even after that, depending on what happens. So I don't necessarily think that this is going away. Sandman, you were talking about you want to have be under a 30.
I just turned around to check it because you brought it up. So we are down a skinch from 33, but still over 30. I was saying to the guys that I was a little bit interested in the fact that we had a market today, which is probably the calmest day in week and a half at least. Calmest day. We've been between 304 and 306. I think we're over 306 right now, right? Well, we're just under it. Anyway, we've basically been between 304 and 306 now for hours, and that VIX seems to be very, very sticky to the upside still. So,
you like the VIX. For me, I still think that the VIX is broken. I use the VIX as a hedge sometimes. I think maybe some news is coming out.
It was fine before all this started. I mean, I don't like volatility. I like to control my risk. Right. But high volatility means I can't control my risk as well.
So let me flip this around. Would you guys ever consider using the VIX as portfolio protection?
Yes, I do it all the time.
How about you?
Even if I think it's broken, I still use it. Yes.
I don't. Well, I mean, in my case, it's easy because I'm day trading. But no, I don't buy portfolio protection, and not even for what I do hold. I don't do that.
And Ryan, if you pull up a VXX chart, pull up a day chart, you'll start to see exactly the contango that happens every month, right? The volatility eats on itself on a 1 month basis, and it's almost a very good trade to just be short the VIX all the time. But if you pull up a day chart, go back all the way, you see what I mean by that, right? So, and Sandman's talking about it being in the actual VIX being in the 30s. I look at the VXX at 20 to 30. That's really high. But man, back in the day, it got up to 400 or 500, and we all know that it continually breaks down. It's a reverse splits all the time. So look, it's usually for me, I'm sometimes shorting it.
See, and that's interesting because for me, when I think about portfolio protection, when I first started doing this, I'm a long bias trader. So full disclosure, I definitely try to trade to the long side on a vast majority of my trades. It has to be a really perfect setup for me to try to go short, and I do that with puts. I don't ever short equity. When it comes to portfolio protection, when I first started learning about this, when I first started getting into this, the VIX was one of those things that I thought was going to protect me. I thought, okay, if something crazy happens and the market starts to sell off, if I own VIX or VIX calls or whatever it is, then I'm going to be protected. I'm going to be able to mitigate some of those losses by having protection. But I've discovered in practice that I actually have better success protecting myself by buying S&P 500 puts. So I buy SPY puts instead of actually trading the VIX. So I'm wondering for you two who have been trading for much longer than I have, did you come to any type of realization like that? What would you say that, traders nowadays should be looking at when it comes to protection? Is there anything specific?
I think they need to look at the amount of money they have in their portfolios, right, and to balance it out that way. So if they have $1 million portfolio or $1,000 portfolio, they need to be mitigated by that much in a put, right? Especially if you, like you just said, Ryan, a SPY put, right? If you've got $1 million portfolio, then you better have at least protected by about 10% of that. Okay,
so there's some real good rubric there for you. But Bernard, what about you?
I mean, I just address it by the way I trade. I mean, I'm doing a third to a quarter of the size I normally do. I'm always fast. I mean, I don't ever leave anything out there. But it's interesting. It doesn't only play to being defensive in a market like this, but just in general, I've talked to a lot of members who are really, really good traders, and they have no problem finding the idea and having the idea go up. But the problem is taking the profit. And I'm not talking about an investment. I'm talking about a trade. And whether it's a day trade or a swing trade. And I really, really encourage, and it's made a difference for a few folks, but I encourage these folks to, and I say to them, you got the hard part down. You found something that went up, you had a profit. Think of that profit as yours. Don't think of it as, well, that's why I kind of differ on the house money thing, because it's like, no, it's not the house's money now, it's your money. So take it. It's okay if you take it and it keeps going up, because
I take the profit. What I'm talking about the house money is,
when you trim it, you're talking about scaling.
Scaling, correct?
Yeah. That too. But for somebody who's really having a difficulty with it, and I talked to one individual in particular who was up tremendously, and day after day after day, and just not nailing it down. And that's a minor tweak, but it's an essential tweak to just be able to do that when you have it. And not worry about, oh my God, it went up another 50 cents or another dollar. If I worried about that stuff, I couldn't be doing what I'm doing.
But that's why I put trailing stops on, Sandman. Because if it goes up, great. If it goes back down, okay, I'm safe.
Are you doing that mentally or mechanically?
Mechanically.
Okay, I will tell you a story. This happened at E-Trade. No, I'm sorry, happened at Ameritrade within the last month, and it was before things went crazy. They used a ladder to put a stop on. It was on LSCC. The order didn't execute. It jumped the limit, never executed, didn't execute below the level. They will not make good on it. This guy, unfortunately, didn't do if that happens, you sell immediately when you can and then argue with them. Unfortunately, he held it and is, many points underwater now. It's a sad story. But
we have a thing called the SEC. I think.
He's contacted FINRA. He's, they're invited. I had him do all that, but I doubt he's going to get his money back.
They're a little busy over there, FINRA.
Yeah. Well, but that happened. So if you're going to do that, I'm all for, mental stops and do it yourself, because I hear too many horror stories about orders that don't get off, and then you're stuck. Who wants to be
That's
arguing?
actually a really good point, Sam. I'm glad that you brought that up, because a lot of people use stops in their trading plan, and they use this to do exactly what we're talking about. They use this to mitigate risk, and they use this to protect gains that you have. Some people use a mental stop. Some people use a mechanical stop. What happens when you have a stop set and the stock moves so fast that your stop isn't actually activated and filled? What do you do then?
It should. In other words, even if the stop,
it should be lifted no matter what.
It still be sold. It should still be sold. Even if it can't be sold at that spot because the market's so fast, it should be sold under the spot. In his case, the order was not executed at all. He was not the only one that this happened to at TD Ameritrade. It happened to a lot of people. And they're, as far as I know, they're still out. Certainly,
this is the point where I could actually complain, because you know what? People have been yelling and screaming that they want zero commissions for so long. Well, now all of a sudden there's zero commissions, and there's no one there to help you. When the software breaks down, there's no one there to be your buddy anymore, because they don't think you're paid by that anymore.
Yeah, I'm just relaying, real life story. So when I hear that, it's like, oh God,
Right.
And I'm too. When I do talk with somebody one-on-one, I kind of tend to take on their issues it really bothers me when I hear something like that. And this is the nicest guy in the world. He is the nicest guy in the world. I'm not going to name the name, but he's a great guy, and it just bothered me to hell. And I tried to give him all the advice I could in terms about, getting some kind of justice. And I'm not very optimistic that he will. Hopefully, maybe they will go,
Okay, well, here's the reason that I asked that is because I also use TD Ameritrade, full disclosure. I use Thinkorswim. And in Thinkorswim, there's a way to set a stop loss order that sells on a limit. So if you tell it what your stop is, and then you tell it what you want your limit order to be filled, it is possible that the price simply moves too fast for that limit order to get filled. It doesn't turn into a market order and then close your position out. It literally sits there and doesn't get filled. So in that particular case, my recommendation is know your software, know what you're doing. Because if there's a way to set up a stop order so that when such and such price prints, get out no matter what the price is. There's a way to do that. Know how to do that. Know the type of stop that you have. And on the flip side of that, this is actually one of the reasons why I like using options for portfolio protection. Because if I'm long a particular stock and then I'm also long S&P 500 puts, if the market sells off, then I may be faced with the decision, okay, which do I sell or do I sell both? But I've got exposure to the upside and I've got exposure to the downside. The decision now rests in my lap. When are you going to cut this? And when are you going to try to either reverse your trade or pick a new trade? So there's a lot of different ways to protect your portfolio. And I think that step one is knowing exactly what you're trying to do. And if that means knowing your platform a little bit better, having a backup plan, whatever it is, I think that's a smart way to do it.
Speaking of which, the VIX is falling right now.
We're below 30?
Yep, 31.15.
31.
Not below 30, sorry.
Still above 30.
Still above 30, yeah. All right, well, you know what? We've had some beaten up sectors over the last week. Any sector you're looking to push some money into, Sandman?
Actually, I'm just trying to think. I've really been looking for that with individual issues, things that hold up when the market's falling. Things that are trending. Monster Beverage is trending today. I traded it right before we started this, and it's up a lot higher right now. It's up $3. I'm just trying to think as a group. I mean, what's held up well?
I like that. I like that pick, Monster Beverage. I'll tell you one of the things that I've been.
If you can think of a theme of stay-at-home stocks, like ETSY has been tremendous. It's a stay-at-home stock. Things like that.
You know what? Everybody drinks beer at home. I've been looking at ABEV and Bev.
Yep. I tend to think Campbell Soup is a really good perishable item that people will stock up on, although it's up today because of the EPS. But that makes sense to me. Things like that. I mean, things that fit into kind of the mode that we're in right now, we'll be in for the foreseeable future.
All right, and so speaking of protection and events and stuff like that, let's talk a little bit about the coronavirus. Obviously, it's in the news a lot. You're seeing some pretty scary headlines out there. Why don't you guys tell me, first of all, what you think about this virus itself? I understand it's new. You might not know about all that. That's fine. What do you think is going to happen? And then subsequently, how do you think that's going to affect the market?
I don't want the coronavirus. I'll tell you that much.
I like to kind of, really when you're trying to deal with something like this, I like to kind of stick with what we know as opposed to what we might guess at. All right. So we know in the best circumstance, it's going to be a multiple times bad or more virulent than a regular flu. The regular flu had a mortality rate of 0.1% this flu season. And it wasn't a particularly weak one either. It was a lot of people lost their, it was a rough flu season. But this virus, I saw today, people are talking about three times, a mortality rate of 3%. I like to really focus on the only place that I have any confidence in the numbers and where there have been enough numbers and enough testing is South Korea. But even in South Korea, they're not going to be testing asymptomatic people. They might be picking up some in that they're testing apparently that whole sect, that religious sect that was infected, but they're for the most part not picking them up, but they're picking up more of that. So in South Korea, as opposed to 2.5 or 3% mortality rate, it's about, I think, 0.7 now, 0.7 of 1%. Still 7 times worse than the seasonal flu. I suspect if we could test an entire population, we would find that the number was lower than that.
Right.
But it's still a very serious thing. It's not affecting children as much, and that's great. Very few children have perished from it. We know that. That's something we know. And if they do get it, it's a very mild occurrence. And then we know that's true for about 80% of the people who do contract. It's it's relatively mild symptoms. For 15%, it's serious, and for 5%, it's severe. Those are the numbers that I keep reading and keep reading about. But to just say, oh well, it's just like a bad flu, I'm not there yet. I don't think we can just say that, because if enough people get this disease, a lot more people are going to die than we lost in the flu season. Now, why should it be different because the number's bigger? Well, we make those decisions. We don't have people drive 20 miles an hour on the freeway. We could save thousands of lives if we did that. But as a society, we say, no, you can drive 60, you can drive 70. So we know that's going to cost more lives, but we still make that decision as a society.
Yeah, but cars are much.
No. But I make the point for reasons. Think about it. I mean, we'd say, well,
but for me, I think we have a much better biotech world than we did, say, 10 years ago. They're finding these viruses.
But Steve, my point is this: if we know it was in a given flu season, we know thousands and thousands and thousands of people are going to die. We don't stop our country because of it. We make the decision not to.
China is.
Huh?
China has.
No. I'm talking about
stopping the Olympics.
I'm talking about regular flu.
Oh,
seasonal flu.
Okay.
Seasonal flu. We don't stop the country because of that. So we know that we're going to lose 10 or 20,000 and a bad what?
But why not? You know what? I'm okay with this. You know what? I wish that even Benzinga, if people can get the flu, let's make everybody stay at home and work from home. I'm okay with that, right?
But you take my point. In other words, this is going to be more severe than that, and we're not, as a society, willing to let 200,000 people die, let's say, if enough people contracted this virus. So we try to contain it. We try to do what we're doing. We're not, to me, until they're testing a lot of people, until we know the contours of how bad it is in this country, I'm not feeling good. I'm not feeling that there's any visibility here. We don't have that. So that's really a desperate need right now, that they get those tests up and running. And until
I think psychology would tell you that people are thinking the worst. They're going out and buying cases and cases of water. Yep. It's like a hurricane about to hit the whole country. I'm used to that in Florida, right? Going to Walmart and there's no cases of water. It's happening everywhere. I went to CVS yesterday and maybe get some wipes or whatever. Gone, right? One lady walked in and bought all the shelves of all the water and everything. It's that mentality. So when I see that as a trader, I go, okay, I'll buy Costco. Okay, I'll buy Amazon. And then you know what else? I'll go buy the beaten up sectors as well. And I like China right now. I think China's been beaten up. And the one thing I really liked, I said this in 2 webinars ago, that casino stocks were going to get absolutely crushed. And they have. And you know what? I like that. I like the fact of looking for companies that have been completely beaten up, like Royal Caribbean, RCL, and Melco, MLCO. I absolutely love that. And you know what? If you look at Royal Caribbean, look at that chart. To me, that's beautiful, right? I'm liking that. You go, how far do you have to go, Ryan, to find, at 75, it was a heck of a buy. So, that's what I was looking at. I got back 2 years that I thought I had lost. MLCO, right there's another good example. A Chinese casino.
All right, I'm pulling an MLCO up here for you. So on that Royal Caribbean, Steve, that looks like you are in at a good price, and it looks like just from the chart, it looks like there's a little bit more at 65, a little bit more support at 65 should it go against you. Something to think about here. Here is MLCO. Now, full disclosure, did you already add this? I might have missed it. You might have said that while I was typing it in.
Yes, I did.
Okay, excellent. And so
I've been doubling down if you want to know.
All right. So this is great. This was actually going to be my follow-up question, and you guys actually just went into that already. With the news of the coronavirus being, in the news every single day, how does this affect your trading? How does this affect what you're doing with the portfolio? Now, you guys pretty much just said that you're looking for things to buy. You're looking to buy low and sell high, the old adage. I didn't hear either one of you say that you're loading up on VIX calls or SPY puts. Or going short the markets?
No.
I'm not.
Actually, when Steve is talking about the kinds of things, and I totally valid to go after those sectors that are really most hurt by this. My approach in terms of what I would do for myself, what I do for my family, is a little different in that what I look for is, because of the drop in, they've thrown the babies out with the bathwater. I like to put together, and I put it in the room yesterday actually, but I put together a list of stocks with very high yields, because people are going to be hungry for yield when this does pass, and they're going to gravitate to these stocks. If you can find ones that have decent balance sheets, where the dividend looks safe, then I think high yielders are. I mean, Pfizer is one that comes right to mind. I think is a great buy down here. After all the dust settles here, as long as Bernie Sanders isn't being elected, it doesn't look like he will be. Then I have no problem buying some of those big yielding pharmas that will look a lot more. So high yielders, and Verizon, Telephone.
I mean, if you like Verizon, then why not American Tower?
I mean, I don't know what the yield is on American Tower, but if it's high yielding, I like it. I want 4 or 5, 6% yields. And if I really wanted to take some risk, British Petroleum.
Sandman, you tell me you're out by the end of the day.
No. We're talking about things that you would buy to hold. I'm not talking about trading things.
Yeah. Okay.
All right, so real quick pro plug here. If you guys are looking for high yield, you can always go into the details tab, type in whatever ticker you want, and click on the key data tab. In dividends and shares, it will tell you what the yield is. So, Sandman, I was actually going to ask you about Verizon, but you snatched that right out of my mouth. Let me go ahead and pull up Pfizer. Pfizer also very similar. We're looking at about a 4.5 dividend yield here. Steve, I believe you had mentioned a ticker. I didn't catch it. What was it?
AMT, American Tower.
AMT, American Tower. All right, American Tower looks like a little bit of a lower dividend yield there. Let's take a look at the chart.
I mean, you know what we have, Ryan? We have screener.
So if you really want to find only yields, you can actually use the screener. Let me go ahead and demo that. While I'm getting this set up, I have a question for both of you, since Steve, you are a squawker, and Bernard, you live and die by the squawk. Your own words there.
Charlie's made me a lot of money the last several weeks. He did before that too, but even with this mess, news stories have risen, okay. And there's been some incredible ones. I just
all right, so that's great. Here is a question from one of our viewers. He said, "Do you guys trade all of the updates that we hear on Squawk?" That's the first part of the question. The second part is, if you pick selectively, what are the signs? So I would say, Bernard, I would start with you here.
One comes right to mind because it just happened and it's fresh in my mind. And I think it was yesterday. So yesterday, not all that much is, I had a decent morning, but it's skinny because I'm trading smaller size. Charlie comes over and says, Tilray, and I know this, and right when he says Tilray, I know Tilray has been pounded down. I know it's been killed. So I don't have to look at a chart to know that. But he says, Tilray says they see no effect from the virus. They're not seeing any impact on their business. I didn't even think. I did not think I didn't look at where it was. I didn't look at what his bid and ask. I do buy. And it ran a ton. And I traded it, and then I bought Uber off of that as well. And that worked too. So that type of thing, I don't even think about. But that involves you knowing that the stock has been crushed. In this market, that would have been probably easy. Everything's been crushed pretty much. But those in particular, people sold Uber and Lyft as companies that would be particularly impacted. Strange car, strange people. That's not happening. And here Tilray comes out and says, we don't see any problem. Our business hasn't changed, hasn't impacted us at all. That was a buy. And that's the most recent example I could think of. It went a long way. I sold it for between 40 and 50 cents. It went another $1 after that. So if I had held, just couple of minutes longer, but I wasn't willing to give up the 40 or 50. And I
Great example. Steve, how about you?
I mean, for me, I don't live and die by Charlie or my squawks. If I did, I'd probably be broke. I will tell you that, as you know, I live and die by my theses. I devise a thesis of what I think the market's going to do, and I place my money in that position. As you know, I was heavy in the housing home builders, right? And that was my thesis. So what am I listening to when Charlie is squawking or I'm squawking? I'm listening to that news pieces that are in my thesis, right? So, for example, if I'm in the home builders and I hear D.R. Horton, DHI, that's what I'm listening for, right? So I'm listening for the tickers that I'm actually in. And actually, Ryan, we can do that with watch lists and news feed. We can make notifications, right?
Yeah, absolutely we can. And we'll cover that in a sec here. I did want to, I'm really glad that you brought that up, Steve, because that's actually one of the things that I use Squawk the most for as well. If I'm in something and I hear that ticker is getting squawked, I am much more liable to listen to
Alert.
that and perhaps react. Now, if it's something that I'm invested in, like Apple, something that I'm going to hold on for a long term, no, maybe not, unless they said that they're closing their doors or not going to sell the iPhone anymore. But if it's something that I'm in for a short-term trade, any of that news is going to be really valuable, and Squawk is able to get it to you really, really soon. So, Nick, I hope that answers your question. He's got a third part. When you say buy, is that options or shares? I'll take this first, and then I'll send it back to you two, because I'm sure that you guys have different strategies. Really great question here. This has to do with your trading plan. One of the things that I like to do is when I'm talking about short-term trades, I prefer to use options than the shares. And the reason for that is because I'm able to define my risk right at the outset. So if I buy $300, $400, $500 worth of options, I'm comfortable. Okay, if these options go to zero, I'm okay with that. That's part of the plan. So when it's a little bit longer term, if I can't predict the timing, if I don't know what the event is, if I don't have a feel for that particular stock, then I may buy shares because I'm trying to capture something that I don't have a specific timeline on. So Steve, I would turn this over to you next.
No, you're right. You're right. In that situation, it's all about timing. A good example today was PLAY, that's Dave & Buster's. It's a great example of that today when we're talking about a possible buyout, or we saw that 13D coming in from Value Act. For me, I went ahead and I don't know the time frame for that buyout, as we all know. So I went ahead and bought shares instead of the actual options, right? So for me, I'm looking at that perspective. It's always about time. And I know that Sandman says often that he doesn't look at the Greeks. But for me, if I am considering the options, I am considering theta and decay, obviously. So I need to make sure that if I am playing options, that I am watching the Greeks as well.
And how about you, Sandman?
For me, and something like that, it's always it's underlying because for me, it's going to be fast. Dave & Buster's is a little different than Tilray in that you've got to be a lot more careful in terms of a buyout rumor. If it's not up too much, and if you know the company and you know the situation, then fine. But you get hurt if you buy too quickly. I wish I could show on a chart what typically happens, though. You will see in that first minute a huge spike up on big volume. Then the shares will come down in that second minute. They'll retrace a lot of the stick, and very, very many times, almost always, you will see a retrace back up to the top of the first stick, and it will actually take that out many times. So,
and it's not the first time the rumors come out on Dave & Buster's.
Yeah, they're there. They've definitely been in the mill. So that's a not a bad way to. And I think if you can see it where it really came down here, where you had the big volume on that first right there. See what it did after it made the high there, pull back, and then it took out the high and it went a lot higher in this case. But anyway.
Okay, that's great. And I what I love there is that we all had three different ways to approach this, and that's really important. Know the way that you're approaching this. Know your own plan. The three of us all approach things a different way, and it could work for all of us. So, Nick, again, great question. I hope that answers your question. Just to close the loop, I want to go back over here to
Hang on one second, Ryan. In the news feed right now, and then also within signals, we're seeing CGC, Canopy Growth. We're seeing the March 13 calls of the ask coming in, the 18 and a half, right? CGC. We all know that cannabis has been a beaten up stock, right? And so CGC, starting to see those calls coming in, right?
While we were talking, I put Tilray in there at 1245. I actually thought to put it in. I suppose I could have said it. They all would have heard me, right? I put it in the room, though. But you can see what Tilray has done off that sweep since 1245. Put it up, Brian, please.
Yep, no problem. Real quick, just to add on to that, looks like there were Cron calls also getting bought, same sector. So let me go back over to the chart.
So that's how we use the news feed. I think all three of us use the same way, right? We see those sweeps. It's very important to understand those sweeps. You may not even play the options market, but if you see a direction and you see the power, the momentum of the direction, that's when I start to get, yay, hello, right? Especially if you look at the volume of that. Well done, by the way, on Tilray.
Yeah, Tilray gave a nice move off that pop. I mean,
okay, really, so Bernard, help me out. What was the timing again on that?
Well, I put it in at 12:45. It actually went off at 12:44:55.
Okay.
So right at 12:45.
Okay, we're actually exposing one of the limitations of the platform right now. Of course, the chart in here is delayed 15 minutes, so it's not actually catching that. This is changing, though. I just want to take this time to let everyone know this is going to be changing very, very soon.
Okay, I can tell you where it was. In that first stick, it went from 1260 to 1289, and then the next stick it went sideways, and the stick after that it popped over 13. So it gave a nice ride.
Okay, and we're actually seeing that play out here off the delay. So this is a really great call, though. Steve,
and when that happens, hold on, when that happens, one of the things I like to see is if you go to the details page, right, and you go to appears, and you might have missed that Tilray move, or you might have missed that CGC move. There might be others that you haven't missed yet. So if you sort that by change percent, there's a whole bunch there for you to look at.
There you go. Another really good tip. Steve, thanks again for stopping me on that. This is essentially what we're looking at. We're looking at a news feed and the signals tool, and we're trying to find options that are telling us something. So great call on the CGC. We're able to very quickly see that other stocks in the same sector were moving like Kron. Bernard gave you a pretty much a step-by-step on Tilray. So that's a great example of exactly how this is being used. Now, real quickly, I just want to close the loop. We were talking earlier about being able to find stocks that have high yield, and we were throwing out names. Steve, you rightfully said, hey, we have a screener that can show you this. I just really quickly want to show you how simple this is. Okay, so right here you can see that I have dividend yield, but I'm going to clear all this off. Right? I'm going to get rid of all of this. All right, and I'm actually going to get rid of this. Okay, so having the screener right here, if what we're looking for is dividend yield, that's actually one of the fields. I'm going to click on all. Dividend yields is one of the fields here. The first thing that I'm going to do is I'm going to add this column to the table. I'm going to click this little shortcut. And then, Steve, what kind of dividend range are you looking for? Or I guess I should ask both of you. What do you consider high dividend? What would you be looking for?
So, in this market right now, getting alpha or getting yield has not been easy, right? Would you agree, Sandman? But I will tell you that, right? But I'll tell you that if you're looking for a longer term, looking for dividend yield for myself, I look for anything over 6% and anything under 15%. And I will tell you that I also sort out oil. I don't want oil because I think it's a dime product, and they pay very high dividends, and they pay high dividends sometimes even monthly. And I used to do that, like Prospect Capital. But I'm looking for companies that can do that. And the only way that I know they can do that is if their profit margins are good as well. So I'm looking for high profit margins as well. And I'm also looking for one other thing, and that is whether or not the institutions own it, right? If the institutions own it, then I know they're looking for profit as well and looking for dividend money as well. A good example of Warren Buffett, right? Looking for yield.
All right, and so what I did here was I pretty much took everything that you were saying and I simply added that to the column here. So I have dividend yield. We're searching between 6 and 15%. And then we've also added profit margin and institutional ownership to the results list here in Screener. And now I can do exactly what you said. I can sort these columns and I can review from the results whatever it is that I'm looking for. So you can sort by dividend yield, profit margin, or institutional ownership. And then while you're searching through these, you can actually see all of those other variables.
And as you see the top right there, Brian, you'll see financial services at the top. That's a beaten down sector. We'll probably get beaten down even more with interest rates going lower, especially the 10-year. But there's a lot of cool things in there. Consumer cyclicals, right? You're looking at real estate. Real estate right now is pretty hot, right? Interest rates are low. People are still buying out there. If you're looking for yield, that's a pretty good area. Home builders have been saying that.
Yeah, and you're right. Financial services is dominating this list here. There's clearly more financial services.
We don't want malls, though, right?
Say again?
We don't want malls. No, we do not want malls. I will tell you this much, though. If you're in the right malls, malls are changing a bit, right? I have a mall near me. It's no longer the old style, right? With a lot of new things going on. I have one I'm going to. It's called Wiregrass. Completely different. It's an outdoor mall. So you're right, Sandman. Not the old traditional Ed DeBartolo, just been given a big pardon from Trump's kind of malls, but the new types of malls that are happening. So yeah, I went there on that one.
While I think of it, apparently the Fed took a lot of heat yesterday for freaking out the markets. If that's true, I mean, I don't want to discount the fact that Biden's been part of this rally, and the whole Biden emerging as a candidate is a positive, but it ain't that much of a positive. So one has to kind of, I think, reassess. I thought it was very wrong-headed to look at what the Fed did and base it on action yesterday. Powell came out on Friday when we bottomed at 285 and said what he was going to do. So you have to look at Friday, Monday, and Tuesday, and then judge what the Fed did, because that's the day we got it. Sure, they sold the news, but I don't see any panic today because the Fed cut rates 50 basis points yesterday.
And you don't even have to look at what Powell said. The one thing I've been noticing on almost every meeting is that they are in lockstep. They're voting together. The last time they've all voted together all the time, every time. It's been a very long time. And you know what? If Mester comes up, Bullard says something, any of them come out and say anything, they're all in lockstep, so they're telling you the answer. So don't miss what any of them are saying to you. I absolutely agree with that. But
the point is that cutting the 50 points isn't something the market seemed to hate so much after all.
Because why? Because quite frankly, the last time we did 50 basis points, things are really bad. Like 9/11.
But you do have.
Are we really equating the coronavirus to 9/11?
No. We don't know. We don't know the extent of it yet. I mean, we don't know how bad it's going to get. Listen, we're not testing for it. It could get really bad if we don't get the act together. What if they have another batch of bad reagent or something and we don't have the test? I mean, I want to just take it one step at a time and say, okay,
but the Fed cutting because of the coronavirus, that scares people. It scares me too. I'm like, wait a minute. What are they?
I really do believe. And the other thing too is, you don't really believe that Powell is just dance. I see it in the room. I see a lot of people saying it, that Powell is just doing what Trump wants. If that were the case, we'd have dropped rates a long time ago. We would have gone.
And he would have dropped them even more. But he's still doing what he's being asked to do.
He's being dictated to by our European and our Japanese friends who have a negative yield on their 10 years. I mean,
Canada didn't cut theirs until today.
No, I know. I understand that. I understand it. All I'm saying is that the dollar, I mean, the dollar can't, a high dollar isn't going to be, it's not behoove us to have it. And there's another thing too. Hold on. I have you on this. I have you on this one. Hold on. What happens to the emerging markets if we have a high dollar? You tell me.
No, it sucks. I mean, they can't buy.
It's a disaster. They have to pay back in dollars.
But you're saying that we have a high dollar. I'm saying I've traveled all over the world. I'm enjoying this right now, but it's really not that high. The pound's at 128. The yen is at 107. The euro's at 111. It's not that.
For a third world country that has debt that has to repay in dollars, it's crazy.
Every country's got to pay in dollars if they take oil.
No. But most of these emerging markets agree to pay back in dollars, and if the dollar stays high while the economy's going south,
and the Chinese they're getting ready to go because they want oil to be priced in the yuan. They want to get off the dollar standard.
That's not going to happen. They've set themselves back as a reserve currency 3 decades. That ain't happening anytime soon. Not in that country. Not the way they run it. No way. Not happening. Not anytime soon.
But back to your point, you're saying the dollar is too high. I have to disagree with you. I think the dollar is not that high. The Dixie has been,
It is if you have to pay back.
I mean, listen, I flipped the dollar in the pound back when it was 2 to 1. I
understand, but rightly or wrongly, we are out of step with the rest of the world as far as our rate structure.
And I would say Trump's okay with that. And I think Trump's telling Powell that too. It's okay. I think he's trying to tell him to get back in line. I get that. He's telling him to get back in line. Whereas
I don't think it's about Trump. I think it's about a 10-year that's under 1%. Trump didn't do that. That didn't happen because of Trump. That's what the Fed has.
He wants low rates. I mean, he's a real estate developer. I mean,
I'm not disputing.
Borrowing money is his game.
I'm not disputing what he wants. We know what he wants. He's very upfront about it. We know what he wants. I don't think that's why Powell is responding, because Trump is saying lower those rates. He said lower rates before this crisis. It wasn't going to happen. It wasn't happening. As a matter of fact, as you pointed out very, very clearly, and I teased you about it quite a bit, that the Fed is not going to cut. They said they weren't going to cut. What happened? We had a crisis. They cut. And they cut fast.
So what you're saying is don't believe the Fed, but believe what Trump is telling the Fed to do.
No, I take Powell at his word when he says he's not moving because of political pressure.
But he said he wasn't going to cut based on things that he saw in the market right now. And Bullard today was saying
investor who voted for it said, "I don't know if it's going to. We don't know if it's going to
work.
I
don't know if it's going to work, right? Yeah,
but we did
exactly. It. So they're doing what Trump is saying.
No, it happens to coincide, but it's not because of Trump. It's like not because of Trump.
I don't know. I have Trump's Twitter feeds. I see every time this time.
I'm not disputing that's what he wanted it a long time ago. He wanted it when Powell was raising rates.
Okay, well then if that's the case, do you think he wants negative rates like Europe?
Oh, Trump? He says he does.
He says he does?
Yeah. He says he
okay, and you think that that's good for our economy and our country?
No, he thinks it'll help. He thinks it will help. He thinks it would help him get reelected. That's all politicians think about, even Trump.
No, I agree. But how good is that for our country to have negative rates?
It's not good. I know. Listen, I wouldn't have bailed out the banks. I mean,
Germany's negative rates has not helped them. They were the heavy manufacturing country, and now they're barely getting by now. It'll kill them.
They had it good for a while, though. They were living on.
They had it great for a while, but then they went negative rates, and what happens?
Yeah, not doing too well. Negative
not
rates. Listen, I'm not.
Ask the Japanese back in the late '90s what they did, right?
I'm not for negative rates, but they're the reality around the rest of the world, and it affects our rates. Because money comes here because they can't get a yield in these other places, and they're buying U.S. Treasuries out the wing-wang.
Yep, as I've said right now, we're the only game in town.
That's right.
I think that's the only thing. I think it's the only thing that really is keeping our market up is because we really are the only game in the whole world.
Okay. I want to thank both of you. That's awesome. This is the heated debate that Stephen was waiting for. So that's really great.
Hey,
I do want to be respectful of our viewers' time. We are at the actual hour here for this webinar. As I've said the last several times I've had you guys both on, are you guys up for coming back at some point?
Absolutely.
Sure, always. And again, I do want to reiterate, I know Steve may have a slightly different view of it, but I do intend to try to be a little bit more respectful and keep the room on an even keel, because I don't like anybody being upset. I don't like one person being upset. So to the extent that that's, it's not. I'm not in the open square saying what that's a different deal. I'm in a room where people are there to kind of pay attention to the market. I really do want to try and be respectful of what certain people feel, so I will try my best. But I will respond. I will respond if it comes up. I will always respond.
I'll be angry because I want to hear your viewpoint. I love your viewpoints because you know what? Well,
I know, but some people don't. But some people don't. They let me know.
Well, here's the thing.
I don't care. Your viewpoint.
They let me know in pretty stark terms that they did not like my point of view. So
the one thing that we all need to be the one thing we always need to keep in mind is that we should always be respectful of people that have different opinions. Absolutely. And I agree with you, Steve. We should absolutely have discourse in the chat room. If you want to talk strictly politics, we have a politics chat room. But in an election season, with a president that likes to tweet directly to the people of the United States, things that happen in politics are going to affect the markets, and there's going to be no way to completely separate that. So we will try to understand one another. We'll try to keep it civil. Let's not insult anyone else. We do have a room dedicated for politics, but again, let's try and help everyone out. So again, I want to be respectful of everyone's time. I want to thank you, Stephen, and thank you, Bernard, for joining us.
Thank you, Ryan. Thank you, Steve.
Always, we will do this again. And until next time, traders, remember, happy trading.
Thanks for the opportunity.